it's my year, yeah.
Oh yeah, good morning everybody. Welcome to the morning show here on Stock Market TV. I am Spencer Israel. Today is going to be a really fun day on the show because mom and dad have left us. Mom and dad are not here. They're letting the kids run the show by themselves. JC and Steve are off doing something, I don't know, kind of top secret-ish. You'll find out a little bit about what they're doing. So they're unavailable. So I've got Patrick Dunuwila, I've got Ian Culley, and the kids are in charge today. It's going to be a fun day. Who knows what's going to happen? We do have a guest, Frank Capillary, hopping on in a little bit. We'll have Mary join us as well, as she does every Wednesday. And it's gonna be a fun show. We have some things to talk about, some charts. I got some earnings, and that's the deal. So you know what to do. Hit that like button, please, and thank you. Let's bring Ian and Pat on. This is the morning show. What's up, guys?
Good morning. Good morning.
Look at this. All right. So I want to thank you both for doing this. Ian, it's early for you. Patrick, it is extra early for you. So I do appreciate you both coming on at an ungodly hour, Pat. But hey, Pat, that's what it takes. You choose to live, in California, and you want to trade. Sometimes it takes waking up a little early. You know what I'm saying?
That's true. Ian knows, but we get done early, so we got that perk to look forward to.
That is true. Wait,
how
Ian,
about that? They let the inmates in charge of the asylum today.
I love it.
They I don't know what they were thinking, but maybe they weren't. But nonetheless, here we are. Ian, you used to live in Hawaii though, so
I did. I didn't. I wasn't trading then. I started trading when I moved to San Francisco.
That's a lot better. San Francisco. Okay. All right. So, like I said, we've got some charts. We've got some things on the list to talk about. We, of course, are going to talk about the chart report because Pat's here. We're going to talk about a lot of happenings in the overnight futures market, in commodities. I know Ian brought charts as well. So that's the rundown. Why don't we just start with just a rundown of, and I'll play our fancy bumper, and Ian can do a little bit of a rundown of the overnight markets and where things stand as we sort of hang out at this, call it critical support level in the stock market. How does that sound? Sound good?
Sounds good.
All right.
All right, so the equity indexes are down slightly. S&P 500 is down about 10 ticks. NASDAQ down almost 70. Dow slightly unchanged. We're looking at bonds still falling down a little bit overnight. Gold and silver have dropped a little bit. Nothing extravagant. Copper still holding on to yesterday's gains. Hasn't done much. Crude up slightly, and the dollar's up a little bit, and the VIX is still hanging in just below 19.
Should also mention Bitcoin up again, up 1.5% already this morning. It's keep on keeping on. Go Bitcoin.
It's got a little winning streak going too. I think it's maybe the 6th or 7th day if it's up right now.
Oh, really? Maybe you might be right. I have a weekly chart up. Yeah. How do you like them apples? When's the last time Bitcoin?
Yeah.
When's the last time Bitcoin had a 6-day winning streak?
Yeah, and we'll have to ask Frank about that. As you mentioned, our guest earlier, I always thought that winning and losing streaks were just kind of fun facts, just kind of trivial. But Frank actually incorporates it into his work, and I really like how he looks at it. So we'll have to ask him about that.
Definitely. We'll do that. And that Frank will join us in around 15 minutes about 20 minutes. Around the top of the hour is when Frank will hop on. So that'll be good. Should we start with just some of the big stuff here. We had a lot of earnings overnight and a couple of really, really big names. You guys want to start with Google and Microsoft, sort of a 1-2 punch here. Yeah, really a tale of two cities, or a tale of two stocks this morning. Maybe we'll start with the Microsoft, because that stock is actually trading high, and I do believe we have a chart to bring that up. Their report was pretty good. Beat on the top line, beat on the bottom line. Cloud revenue, they don't like break down like as Azure, right? Individual Azure revenue, that's like their cloud, but they do that's their cloud, but they do have their cloud segment, which includes a few other things, and cloud revenue is continuing to grow. That number came in above estimates, and the reason cloud is important is because cloud has been sort of the big revenue driver, kind of, I guess, before AI, right? But that's not really a revenue driver yet. Cloud has been the big revenue driver of these companies for the past few years. And when I say they, I'm referring to Microsoft and Google and Amazon, right? So Microsoft's cloud continuing to show strength, and that's why the stock is up. What is it up this morning? Holding on nicely to this after hours gain. So we're at 346. So we're up. What's that? 10%? If my math is my math right?
About 4.5%.
5%. Yeah, about 4.5%, 5%. So yeah, strong morning for Microsoft, and you can't really say the same thing about Google, which is down more. It's down more than Microsoft is up. If we can pull up that chart, please. And the big culprit here is cloud growth for Google. For Google is continuing to slow. We actually have a chart, I believe, from Reuters. If you can pull that Reuters chart, that bar graph up of there we go. This is Alphabet's cloud revenue growth dating back to Q1 of 2021, and you can see it just continuing to decline. And it did decline in the most recent quarter. So even though the rest of the report from Google was good, right? Like they're still, drowning in money. Advertising has rebounded from basically a COVID-induced advertising recession. That's rebounding here. It was a good report overall, but the revenue growth in the cloud segment, what people are kind of holding on to this morning. And so, whether or not it's justified is a whole other question. And I know you guys want to talk about the price. So let's maybe bring up the Alphabet chart and just look at that thing. But do you guys have thoughts on where Google and Microsoft stand here?
I mean, as long as Google's above 125, I think path of least resistance is higher. I mean, I wouldn't want to own it below that level. What do you think, Pat?
I will say it was pretty strong heading into the report. So, not a little bit, that's meaningful give back, but it's in a decent spot here. It's like you said, above that 125 level. Is that what you mentioned, or 130?
Yeah.
Yeah, above 125 looks pretty good there. Momentum's diverging a little bit, but we'll see what comes from some of these other mega cap earnings. When does Apple report?
I'm glad you asked. Apple is today. Tonight we've got Apple and Facebook.
No kidding.
Yeah.
Wow. What a week.
So we're sort of in this is really it, right? You had Alphabet.
Looks like Thursday, right?
No. I believe it's tonight, isn't it? Is today Wednesday? Isn't I had it as tonight? Am I wrong? Amazon's Thursday. If I'm wrong, that would,
so according to TradingView, but I'm double checking on.
If I'm wrong, that would be embarrassing. But I thought they were tonight. I know we have Amazon tomorrow, but yeah. So this is like big tech earnings week, right? So we got a lot, sort of, this in a lot of ways. These reports, of course, could determine the direction of these stocks, which will in turn determine the direction of the overall market, as we've discussed ad nauseum. So really important week here. Not so much again for the numbers, but just for the reaction to the numbers. And it is unusual, I think, to see Google and Microsoft go in opposite directions off their reports, right? So obviously, it's the overnight session. It's not very liquid. Not a ton of volume there. Let's watch these. I imagine we will all be watching these incredibly closely throughout the morning and seeing A, can Microsoft hold those gains? B, what does Google do? Does it keep dropping, or does it come back a little bit, or does it stay around where it is? Because as we've discussed for the past several days or weeks even on this show is the market is continuing to sort of hang out at a very critical level. And you would think if it's going to go higher that you would need these two guys to participate. You would think. So
at the index level, absolutely.
At the index level, yes. Yeah. At the index level, no doubt.
I will say Microsoft is a little bit bigger than Google, so it is nicer seeing the bigger one beat, or at least holding up. The reaction is a little bit more positive. But, these mega caps also have this really poetic way of rotation within them. During these earnings seasons, sometimes you'll have one or two miss, but the other two will have a really nice beat. Or you'll get another mega cap like a Chipotle or something, or a Priceline or something like that, all of a sudden having a really nice move. So there can be some kind of tricky rotation within these big guys around earnings season. So I try not to focus too much on one report and say, oh, the market needs Apple. But yeah.
Thank you for the correction, Riley. I went to Apple's IR page. I don't know why I had Apple this week. Apple reports on November 2nd. So next week they report. But Meta is tonight. So we got Meta tonight, Amazon tomorrow, Apple. Why Apple? That's so strange. They usually all report all together, but whatever. Neither here nor there. I believe we have charts of Apple and Meta. If we can maybe bring those guys up too, and just sort of get the lay of the land for big tech at the moment. There we go.
Yeah, with a lot of those mega caps, they really just need to kind of reclaim those prior highs from either 2022 or 2021. Until they do that, it's kind of hard to expect them to make a lot of meaningful progress.
Let's go back and retest it. Is that a 200-day upward sloping 200-day moving average? I mean,
yes.
Yeah, that's constructive. I don't know. This is a good spot to see buyers come in and start driving prices higher. But yeah, I mean, it's got to get back above 180, 184, 185.
Yeah.
180. Okay.
I thought you'd get more downside from that failed breakout that happened kind of over the summer, but you really didn't see too bad of downside. A move like that, we could have seen a 20% decline from that, but I think Apple only corrected like at most maybe 14, 15% on a closing basis, 14%. So not a huge reaction there from that failed thing, but it needs to repair that. It needs to get above those.
What is your guys' general feeling about price right now, either at the index level or just with regards to breadth, as we sort of approach this traditionally strong time of the year for stocks, and yet we seem to be just kind of meandering about down here.
What we saw on Monday, we saw a really big kind of flush in breadth on Monday. A lot of things where, a lot of breadth metrics hitting levels that you didn't see since October of last year, or even worse. So that kind of looks like washout. And like you said, we are at that seasonal turning point where it's like, okay, it's now or never. Are we going to start getting going or not? I don't think we're past that point where it's like, okay, we didn't get it yet. It's too early to say that. But you have some nice positive developments going where, You have RSI diverging, didn't make a new low with price yesterday. And yeah, we're holding that really solid support level. 4,200 has just been the level over the past 2 years. So as long as we're holding that, the 200-day RSI is diverging, seasonality's turning. I think there's a lot to like if you kind of ignore the headlines and ignore, you do have to ignore some of the breadth weakness. That is kind of a red flag, but breadth has been terrible all year, and it hasn't mattered. I think the breadth thing will really come down to small caps, and if those can get going, then you'll see the breadth data improve meaningfully. And I've mentioned it before, but small caps have, we know that the last couple months of the year are good, but small caps outperform the S&P even during that time. So if we get that, then all those things would be really positive. But, it's a big to-do list for the bulls.
Yeah,
Do you?
I'm sorry, November's the best month
Yeah.
of the year for small caps.
Really?
Yeah, I think it
On a
is.
relative basis?
It is, or even on an absolute basis. And I think it was 2021, November 2021, when they didn't perform well. It was kind of that heads up. I remember talking to Steve about it, like, oh, you're not liking the action in small caps heading into the end of the year. So we have a big month coming up. Big month coming up.
That was when they did the failed breakout, right? Because I remember Russell broke out, and I remember getting super bulled up, being like, oh, this is great. The Russell's finally breaking out of its range. Sure enough, that was it. that was the failed break.
Gets you every time.
Yep. And I actually remember meeting John Roque for the first time at in the lobby of his office that day, the day the Russell broke out. And I remember saying, like, oh, this is great. Russell broke out, all that. And he was like, yeah, but I was looking inside it the other day and it looks pretty sketchy. You had like Avis was the largest component, or Hertz maybe. One of those.
No, I remember I remember when Avis was like the largest component in the Russell.
Yeah. And I think you had a false breakout in transports too around then too. But man, 2021, what a year.
Yeah. Well, Avis was a freaking. It was like sort of a meme stock for like a hot second there. I don't even remember why, but if you just pull up a chart, like if you don't remember what happened to Car, the thing went to $500. I think they did a reverse split, so it wasn't actually that high, but it went on a reverse split adjusted basis. It went to like $500. It was insane. Anyway, that was a while. That was a while of time. Let's put it that way.
Yeah.
Ian, talk to us about the seasonality in your neck of the woods, whether it's in commodities this time of year or in bonds. What can you even say about that? But
it's a strong time of year for natural gas.
Yeah.
For natty gas. Jeff actually was asking about natty gas here in the chat. So I added a couple charts. I have a continuation chart on slide 27. Natty gas broke out, I think like last month. And it's looking good as long as it's above this 285 level. We had that pullback. Kind of was expecting a pullback this month. Looks like we got it. If you look down at the next slide, which is the December contract, just found support around 321, those lows from last month. So I like trading the December natty gas against that 320 level, as long as it's above there. I like it long. Maybe heading back up to those March pivot highs. We got that first bounce off of that big sell off early in the year. So yeah, I like natty gas heading into the end of the year. In terms of commodities, what I'm most focused on right now is copper. Copper had a big day yesterday, but base metals in general have really been lagging. We've seen all crude oil and energy really take center stage in the past few months, and it hasn't been the case for other pro-cyclical commodities in the metal space. So Want to see crude, or want to see copper and tin and aluminum and other industrial metals start to participate, to add conviction to the commodity super cycle thesis. Um,
And that's and you do believe that's what we're in.
Absolutely. I mean,
Yeah.
look at the tip IEF ratio. Inflation expectations, rates, nothing's really changed in the past few months. Rates
It's
continue
just
to
kind of
rise.
paused.
Yeah, it's just a pause, and even in the dollar, as long as it's above 105, 105.50. I mean, right now it just looks like a run of the mill, consolidation within an ongoing uptrend.
Yeah, Colin in the chat here had asked about the dollar. He said, all about the DXY at 106.5.
Yeah.
JC says the weaker dollar is a need for equity bulls, not a want.
Yes.
So, something I've been watching on the dollar this week is the fact that last week the 10-year made a new high, kind of peaked at resistance-ish. But the DXY, the dollar, did not. And those two have been closely related, especially since the summer. So what do you make of that?
Yeah, I brought another chart that has the 10-year and the dollar overlaid with a correlation study, a 21-day rolling correlation study, and it actually just went negative. So we are seeing a decoupling in the near term of this relationship. But I mean, it's still pretty strong.
Yeah.
I look at this almost, this correlation study almost like bearish and bullish regimes for momentum. It's kind of how I've been trying to explain this. And we're definitely in a positive correlation regime for these two charts. So I don't think too much has changed. Yes, in the near term, you're 100% correct, Pat. That's definitely been on my radar too. Not quite sure what to make of it. I think it's just a pause right now. But it will be interesting to see if we do finally get some decoupling there, a more significant decoupling between rates and the dollar.
What do you make of yesterday? Stocks were strong and the dollar had a good day. Was strong too. So do you not put too much emphasis on any one day?
Yeah, I don't put too much emphasis on any one day. I was going back and reviewing a lot of John Murphy's work on intermarket analysis, and he uses a lot of weekly charts, and he zooms out a lot. So I try not to put too much emphasis, like you said, on a single day when it comes to intermarket relationships.
Yeah.
Because think about gold. Gold is caught a bit, and the dollar was catching a bit. A lot of that had to do with just a turn to defensive assets. I mean, defensive stocks have been catching a bit as well. So we'll see. Price is king, and there have been great levels to get long in terms of the precious metal space. I still think there's a lot of work to be done there. I'm not ready to get all bulled up and go all in on precious metals, but
what would you like to see in order to get more bulled up on precious metals? Maybe silver? Or?
Yeah, I want to see silver significantly outperform. I want to see the dollar start to roll over a little bit. I want to see real yields just stop ripping. It's like the relationship between rates and equities. Like if rates just chop sideways, the dollar just chops sideways, that would be great for gold. And that just hasn't been the case. Here we are. Yeah, it was a 10-year real yield. It's been ripping. Dollar had an amazing run. That's another hot streak. I mean, was it 11 weeks in a row or?
The dollar?
To like 12 weeks.
Yeah, it's 11.
Yeah, so I brought a chart showing that as well.
Oh my gosh!
And when it finally snapped, it barely snapped. It was like seven basis points or something.
Yeah. So I could see another leg higher in the dollar. That would not surprise me. So, but again, maybe that's trouble for the S&P 500. Maybe that's trouble for just the indexes in general. But there will be opportunities beneath the surface to get long for sure. And I think energy will most likely be one of those spots.
Yeah, and we've been talking about energy within the context of there's been we appear to have entered a wild M&A window, which tends to that tends to act as a tailwind because people just there's a lot of hopium out there. People are thinking there's rumors flying. Oh, this company is buying that company. That company is getting taken over as well. Not always crazy premiums on these deals, but M&A consolidation is does act as a tailwind. So you have that going for it as well. In addition to the actual commodities and the trend, and so we'll definitely keep an eye. Yeah, energy seems. I'm a normal person in that I am like crazy underweight energy, so I need to go and probably get myself some XLE or something. I don't know, but
uranium.
Uranium woke up yesterday, didn't it, Ian?
It did wake up. Yeah, I like that. It's finding support at a logical level. I'm talking about URA, that ETF. So yeah, it's looking good. Thoughts on cocoa making 44-year high?
Yeah, wow, 44-year highs for cocoa.
I don't hear that often.
Yeah, so cocoa's run into resistance at a logical level. Momentum is posting a bearish. Yeah, it is pretty bearish. I see a bearish divergence in momentum. I want to see the 14-day RSI get above 70.
Yeah, I mean 14-week RSI isn't there yet either.
Yeah, so that's it. It would make sense to see cocoa continue to digest gains here. I was joking around with a buddy yesterday about how I think cocoa's a short. Not quite ready to come out and write about it because I don't like picking tops or anything, but risk is well defined.
Shouldn't Ozempic end that?
Ozempic will be the end of the cocoa futures market. It is that powerful. It's going to just end the market. So no more.
I've heard the most ridiculous narratives around Ozempic lately. I don't know if you guys saw that note that some analysts put out talking about how it was a bullish catalyst. Ozempic's a bullish catalyst for airlines. Because they won't be carrying as much weight anymore.
Yeah.
I don't get it. It's the new AI. It's the new.
Dude, you know what though? Because I talk about Ozempic on this show, it seems like every day, and my little friend here is recording everything that I say. I get served Ozempic ads like on social media, like all the time. On Twitter, on Reddit, on Instagram, I'm getting Ozempic ads left and right because it hears me. It hears me talking about it, right? So. They're always listening. All right, should we bring on Frank? We have Frank Capillary here, and he brought charts, and we are going to talk about winning and losing streaks here because that's something that Pat wanted to ask about. So, without further ado, let's bring on Mr. Frank Capillary.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What's up, guys? How are you?
Frank.
Good morning.
Good morning.
Thanks for coming on, especially last minute like this.
Oh, my pleasure. You guys may take the place of the other hosts if you do a good job just saying. Spencer's watching closely.
Well, Mom and Dad aren't here today, Frank. So who knows the direction that this conversation will take. We'll start off with the market. It will end up on God only knows where. But let's start with some of these charts. And we were talking at the top of the show just about streaks and the value looking at streaks, right? So maybe you can sort of give us some color on how you incorporate those into your analysis.
Right. So once again, thank you for having me. It's always a pleasure, guys. And the show is doing great. And so, we just came off number one, a 4-day winning streak. Probably don't remember it because it got things really turned to the downside after that. But I think it's important to realize too that we just came off a 5-day losing streak, which was the longest of the year so far, going back to December of last year. And so, that's important because the rest of the streak so far of this year, we saw a good amount of bid come back into the system, right? There's 5 previous ones, 3 of the last 5 were able to rally. The issue there is that the only time that produced a gain that was longer than just a few days was back in May, right? And so in May, of course, things were changing. We had the second quarter rally beginning, and the uptrend really started to mature, meaning that the number of 1% declines on both the positive and negative started to decrease, and that's how uptrends and bullish patterns can start to work. And so after that, of course, we had the rally that extended into July. Now, the 4-day losing streaks that occurred since then, of course, happened in August and September, and those were just led to more downside. And so, the concern now is that, we had the bounce yesterday, didn't really do much because, it's just a little bit of a blip as opposed to what happened over the last 7 to 8 days. So we need to see more. And really this goes back to what we always talk about, where, the first, how do you get back to an uptrending market, or how do you get back to a healthy market for that sense? And so the first, number one, I go through different steps on a very short-term basis, is to find support or at least have a rally or a day, right? That was yesterday. And then we need to see a good follow through. And then from that point, then we start to look at, is there going to be a higher low, and can that higher low then develop into a bullish pattern? Can we see a bullish pattern break out from that? And really, we went through that process both in their 4-day winning streak at the end of August, and again, just recently, where it looked as if we're going, getting through that process better. But of course, both times fell right before a more, multi-week or at least multi-day pattern could see a breakout. And so this is why we're still in this downturn that we've seen, of course, since the end of July.
I see. And I know you're a big classic chart pattern guy. And a few weeks ago, there was a ton of talk about that head and shoulders that had formed over the summer, that 3-month head and shoulders. Yeah, there you have it. So did that one meet your objective, or how are you thinking about that? Do you see it as a valid head and shoulders, or are you just kind of waiting to see how it plays out?
Yeah, well, this is the third iteration of it right now, Patrick, as you know. And the first one, again, everyone saw it in August, right? And it was pretty clear. We don't have that right shoulder noted there, but we can remember what that was like. And so we never saw the break at that point. We had to go through the good reflexive rally into September. Then, of course, the September one ended up having to break down, and then, of course, rallying back up. And now this is the third attempt of it. And so I respect all patterns, but I think we also have to realize that we don't have the chart here, but there's been now, by the way I look at it, 4 different very large bearish formations that have formed since October 2022. Needless to say, none of them played out. We've seen, marginal breaks like we just saw, and sometimes not even a break at all. If you go back to, last October, and again, when we saw it in March. So we have to respect these and realize that, again, they haven't played out. But as we know from technical analysis, the more a support level is tested, the weaker it eventually gets. So I think psychologically, what does that mean? It means that, buyers have been used to being rewarded for buying dips, especially since the March lows. And if that continuously fails now, it's going to throw your hands up and be like, well, this is not working anymore. Market's character changed. I'm going to step back. Less demand, more supply, lower prices.
I see. Did you say there were 4 bearish patterns that failed since the previous October low?
Yes, and I'll send you a chart for that if you want it for your viewers. But I put that in a few pieces in a few of the YouTube videos I put out recently, and 2 of them actually really taking into account the price action we even have now over the last 3 months. I look at the one from August as one that failed, and again the one from September, because again back up. So anyway, you can see how this plays out, where it takes a long time for these to form. And along the way, you could look at this really, another way of looking at it is just one long consolidation pattern where, we've had a good rally and now we're moving sideways, in a very big range.
I see. And I like how you kind of work backwards on that, where you see the bearish pattern and then you kind of look to see how the market responds to it. And if those bearish patterns don't play out, you interpret that as bullish. Is that correct?
That's right. And I think it always goes back to the dominant trend, right? If these patterns, topping formations, appear in the dominant trends and the trend continues to hold, that just means that it may look ominous, of course, and of course there's always negative headlines around it, but that the bid is still there. And I think this is, of course, a big test right now, because again, it's happened for the same time. There's a lot of other factors at work.
And I know you've been paying attention to, and you touched on it a little bit, but the daily volatility, the number of 1% moves. What are you watching for in the near term for that? Do you want to see less 1% moves? You want to see the market kind of calm down and establish a trend, or?
Yes, overall, that's what we want to see. I go back to what happened in 2022. We had over 130 for the year, so average of about 10, 11, 12 per month, which extended into the first quarter of this year. And so again, it wasn't really, we saw some good moves, but each of them, we saw some whipsaws along the way. And so at that point, breakouts can't be trusted. Breakouts were trusted and worked out from April 1st, right, up until the end of July. And that came with a very lower amount of 1% gains and losses. So, just as we know, that just means a lower two-way volatility. That means the whipsaws aren't going to be as prevalent, so we can end up trusting breakouts more. And just, I try to identify breakouts all the time, of course, like everyone does that pays attention to patterns. And a lot more started to occur just 2 weeks ago. And then as, you really get excited about something, the breakouts stopped working again. And so we know that anyone who really bought anything that was near a breakout pattern over the last 2 weeks either got stopped out or still holding it, waiting for that to occur. And so, that's what we need to see going forward. Now, I would say this, at the beginning stages of a comeback, right, bigger gains obviously can kickstart something. But if that keeps on happening back and forth, again, it just reminds us of what happened in 2022.
I see. So some nice 1% positive days would be good here, but I like what you said there about how that daily volatility can kind of affect how the breakouts play out, and whether or not they do hold or you get whipsawed out of them. That's a really good point there.
Frank, what about Bitcoin here, or your instrument of choice? It doesn't have to be Bitcoin per se, but we've been waiting and waiting to see if Bitcoin's going to break out of this range. It finally did. Now what is the question?
Yeah, now what? Exactly. Yeah. Well, I was looking at that today specifically, and two different things. One, just looking at the GBTC, trust. Now I can't call it ETF yet, right? Of course.
Sure.
But,
yeah, trust.
Anyway, so it's now up, 30% in 8 days, and so pretty much in line with the three previous really big rallies we've seen this year. So what struck me was that everyone got excited about it then, and of course now, and you have to think that majority of this move, at least on a short-term basis, is probably behind us, right? But that's not really a negative. You can't expect 30% gain in 8 days at any point in time. So you have to be there for this, to obviously profit from it. But the bigger point is that what happened after those big 8-day moves. And so we basically consolidated, and in Bitcoin term, consolidated means larger than normal, drawdowns along the way. But the most important thing about this chart is that each one of those drawdowns produced a higher low, right? And so I think that's the most important part about this going forward. Now, the other part is that Bitcoin itself, started to rally last week. And of course, we can attribute to, chatter about the ETF being approved again. But I think it's interesting because we don't have the chart here, but I've talked about it actually in the chart summit, where if you look at going back in history, it has a very obvious negative correlation to the dollar. And last week, the dollar didn't go up, right? And we probably didn't know as much as because yields spiked and everything, all the risky asset
Oh, yeah,
classes
there you
went
go.
down. So
Wow.
can't remember a time really recently that S&P was down 2% and the dollar was down as well. And so I think Bitcoin in general will give us an idea of speculation, because the other part is that the S&P 500 and Bitcoin, really don't move in opposite directions for an extended period of time. So, is Bitcoin an indication that, speculation is turning back and going there first? Or is it just a blip on the radar screen and it's going to come back in? And I think just paying attention to it, even regardless of one's feelings about crypto in general, will give us an idea if like the positive seasonality for the market can actually return for the fourth quarter.
And
Yeah.
and to your point about the drawdowns, I mean, if you own Bitcoin and you can't take a 15% drawdown, then like what? Maybe it's not for you, right? I mean, you know what I mean?
Yeah.
Oh, without a doubt. And I
Yeah,
think that's why you had to kind of take a step
yeah,
back and look at, what it usually does.
right.
And overall, putting a really big picture, it makes higher lows almost every year, or has, right, since the beginning. And so it maintains an uptrend line in a log scale going all the way back. And I think that's important to see. And, there's new players every time it happens, and you hear about, I'm not going to sit through a 60% drawdown. That's crazy. Of course you're not. But at the same time, I heard an argument about this. Is it a bubble, or is it just an asset class that acts like this? So bubbles burst and don't come back.
Mm-hmm.
Bitcoin has proven to come back, so it's going to be important to see it at some point in maybe next year, or I don't know, time frame wise. But again, challenge those highs again.
Yeah, I mean, people have been calling it a bubble for years now, right? Usually you don't see that
course.
happen. And I think every time you see that kind of popping, so to speak, and then the subsequent recovery, it kind of galvanizes the bulls. And it kind of validates them, kind of gives them confidence there. So that's a
Yeah,
really
I
good
mean,
point.
well, how often does the bubble pop and then reinflate and then pop and reinflate? Like never, right? That's not a thing that happens.
Yeah.
Right. So.
And I would say it does correlate with equity market and rising as well, right? You can go back to the first time we saw that in 2017, huge first time everyone got really involved with it. But don't forget, that was one of the most persistent uptrends the S&P 500 and equity market had in history too. So both of them were occurring at the same time, and as things change in 18, we know what happened there. So anyway, the point being is that if this Bitcoin rally is for real and has legs, I think that also means that there's going to be appetite for risk beyond that as well. You see in the stocks.
Interesting question from Nick, though, to the point about the correlation with the S&P 500. If it does start to diverge, could that be an argument of saying, oh, look, it's maturing as an asset class, and right, and this is going to evolve into a store of value and not just a crazy YOLO instrument, right, for people to get rich tomorrow?
I think that's a very valid point. And I would also say that with every rally we've had with Bitcoin over the years, there's always a new argument about what it's correlated to,
right,
what it means, right, and
yeah,
all that. And then just when everyone gets on top of it, NFTs get created and all that stuff.
Sure.
So you know how it goes. So right now, I would say that, just by looking at it from my perspective, sentiment isn't exactly stretched by any means. It seems to be more doubt than anything else. Like just watching a respected strategist on another financial network, won't name names, brought up Bitcoin, and the host was like, "Well, no one cares about that. Let's talk about something else."
Maybe they're referring to the price. And was that a week ago? Because I can definitely see why they would say that, right?
It was a week and a half ago before this happened, and now, of course, it's just a weird sentiment.
Give it a few months, and they'll have the tracker back there.
There's nothing like price to change sentiment, right? So yeah, of course,
100%.
Wow.
All right. Frank, was there anything else on your radar? I know you had a bunch of charts today in your morning note. Anything else you wanted to hit on?
Well, I think it's just important to see how these like the bond ETFs and XLU react, because we know that they got really extended to the downside, and now you have a snapback move, right? But you really just can't even tell from that longer term chart there, right? And so I think we really have to see how this goes. We know what's driving it. We know rates are driving it and all of that. But with so much attention on, say, the TLT, seeing how this develops is going to be important because you just had now like a 3-day move of about 3%. Not a lot, but TLT terms it is. But you can see that's happened more than a handful of times in the middle of a downtrend, right? And so I think all this will play together. But we just have to you can't get crazy about single day moves or even like a week at a time. We're talking about major trends like this.
Frank, I got a quick question on this one. What are you looking at with the rate of change, the 3-day rate of change there? Are you looking for a divergence or?
No, that was just trying to show that a lot of people, again, just trying to work on emotions where you hear that this is up and so many times we have a bounce. People want to say like, the bond market is about to rally, TLT, buy it. And it could happen, right? So, but when you see a big move like this, again, it could kickstart a bigger advance. But I like to just qualify that looking at the last few times it's happened. And again, looking from this perspective, at this stage does not look any different than the prior 3-day big moves that were then instantly just reversed.
I see. You're asking what's happened when TLT has rallied 3% in 3 days like this before, kind of.
Right. And according to this, not much. Right. But you go back to, looking back to last October, right? You can see that those spikes are even bigger, right? So those 3-day moves there, Patrick,
yeah,
from October, November, December. And that's what we're talking about with the S&P as well. You want to get some really strong buy interest at the beginning of these things to kind of shift momentum and then have that higher low develop. So that's what we need to see with any of these areas that have been going down. You need to see those big moves start,
like a thrust,
then turn,
almost.
and then lessen as it goes along.
I see, like an initiation kind of like lift off kind of thing.
Yeah, whether that's short covering or whatever, it just has a motion, and that can sometimes change the character that way, and that's when momentum can shift, and that's when we start looking for bullish patterns again.
I love it.
All right. Frank Capillary, founder of CappThesis. You should follow him on Twitter. Check out his site. The links to those are in the description of this video on YouTube. Frank, it is always a pleasure. Thank you for coming on today.
Thanks, Frank.
Thanks, guys.
All right.
Have a great day. Really appreciate it.
Cheers.
All right. Frank, definitely one of my favorites, no doubt.
He is a class act.
There's a reason he's been on this show like 3 times now because he's one of our favorites.
I love his charts.
Yeah, he's really got his fingers on the pulse of the market really well, and kind of like I said, looking at the patterns that exist and not trying to predict based on those patterns and there's a head and shoulders top, must be bearish. More so observing how the market responds to those bearish patterns or the bullish patterns, and looking for that change when a pattern suddenly changes, when you start seeing bearish patterns fail and bullish patterns start to take hold.
I like how he looks at volatility. I thought that was really interesting.
The daily volatility, like the
volatility, yeah,
that's a good point.
Yeah, heading into I'm sorry.
And on the bond conversation, Wavy's pointing out that there's a big auction this week. I've said this, I think I said a couple of days ago. I keep seeing every day. I see another article about a big hedge fund guy or whomever who is buying bonds, but they never say how they're buying bonds. Like, there's 1.5 million ways to buy bonds, right? Like, I just can't imagine buying like LQD or like TLT right now. Ian?
Yeah, like, I would imagine if they're a hedge fund, they're probably buying them through the futures market. I don't. That would be my guess.
And they don't even say what bonds. Are they buying corporate bonds? Or they don't even say what they are. So
when I hear bonds, I just think U.S. Treasuries.
I
mean, but didn't Ackman came out yesterday or the day before, and he's I think
it was Monday.
All his shorts, his bond short.
Spencer, what did you think of that?
Yeah.
His timing can sometimes be like amazing or like hilariously bad. Like he was what was his Netflix trade? He was long Netflix, I think, and then he covered it. Did he cover last year? think he covered. Yeah, he was long Netflix for like maybe a year and a half, and he covered last year.
Wait, you mean
and
short? If you said he covered.
Yeah. I'm sorry. He was long and he sold.
Oh, okay.
He sold during that epic downturn, I believe. Don't quote me on this, but I feel like he missed very badly on Netflix. And he's very public with his opinions, right? This is right. He lost $400 million on a Netflix stake. He sold in April of 22. Just to if you pull up a Netflix chart, you can see literally the bottom was like at that point he sold it like right near the bottom. So sometimes he can be hilariously bad, but other times he can make amazing calls. He made an amazing call during COVID, when he loaded up on everything right when the Fed stepped in. So yeah, he's he at the end of the day he's just another guy, right? He's just a guy. He's a rich guy and a smart guy, but he's only one person, right? And one person
people
doesn't.
in the chat are bringing up his "hell is coming" thing.
Yeah.
Remember when he almost cried on CNBC?
I think he did cry, on CNBC, and that was like the COVID low. I think it was right around there. He went on CNBC and was like, the world is coming to an end, and then the Fed stepped in, and next thing you know, he's buying everything he can get his hands on, right? So yeah.
I mean, we can't dunk on a billionaire too much.
No,
he's
who are we to dunk on a billionaire? You
got to be able to laugh at this stuff. It's just
yeah. If you haven't read the book, there's a book about the whole Ackman Icon Herbalife saga. It's called "When the Wolves Bite," I believe. It's by Scott Wapner. It's a very short book, very easy read. You can do it in a weekend, and very interesting. Decade-long saga between those two, all around one stock. Is pretty funny. But anyway, let's move on here. We're gonna have Mary hop on in a couple. You want to talk about chart report, Pat? It would behoove us, since we have the guy that made the chart report here, to talk about yesterday's charts in the chart report. So let's do that. Gotta be honest here, Pat. I'm not sure how much value I should take out of this tweet that yesterday was about all-time highs and the performance of the S&P in years following a year with no all-time highs. Did I interpret this right?
I get it. And that's totally fair for you to push back on that. And, last year we could have said something similar, right? We had one all-time high, and it was on the first trading day of the year. And then we pretty much went all year without an all-time high. So, but you know what? Here we are. We're up double digits so far. So, maybe it did materialize into some strength here. But I think it is interesting. And I also, whether or not it plays out, I think it's an interesting visual to look at. You can have these droughts of, where you don't see a record high. You can see those last 5 years. It's not too uncommon to have those periods. I mean, you had two of those periods in the between 2000 and what happened in the Great Financial Crisis. So that was a pretty rough decade there. But, as far as the overall market chatter yesterday, everyone was really holding their breath, for Google and Netflix earnings, Microsoft's earnings, and just the huge amount of data that we're going to be having from earnings this week. So it seems like kind of everyone's holding their breath. Everyone wants to see how we're behaving around this 200-day moving average. So it seems like a lot of people are in wait and see mode. Not many people making strong opinions, making strong bets here.
quote of the day. I've got to be honest with you. I don't know who that is. Should I know who that is?
Thomas Bulkowski, a lot of CMTs will know him. He's a big chart pattern guy.
Okay.
He did a lot of work on, he quantified a lot of these chart patterns to see which ones are tend to be the most successful patterns, which ones tend to fail the most. So he did a lot of work on that, but thought it was a good quote. But we can take a look at a few more of those charts. There were a couple. So this one, I like this one because it kind of highlights that RSI divergence we were talking about there. It's a little hard to see RSI down there, but there were a few people talking about that big washout we saw in breadth on Monday. If you go a little bit lower, there's one tweet from Willie and then another from Liz Young there. This one talking about how the S&P has actually held up pretty well, considering 14% of its members were above its 200-day moving average.
Here we go. Oh boy. Well, we know every time Willie does this, he always like scares me. You know, like I don't know if that's like his intention, but the way maybe it's just like he's so blunt about it, and like I don't know.
I think his bigger point is we're so quick to say, oh, it's a bull market, it's a bear market, very black and white type thinking. When you really look at some of the data, this isn't the most bullish bull market that we've had. So just kind of putting it into perspective, I think is valuable. But that next one more down, I thought this was fascinating. And Spencer, I know you pay attention to buybacks a little bit. I didn't even know that there was a blackout period for buybacks, but when you look at this one, you can kind of see how that might be creating seasonality and driving some of those seasonal trends. I thought that was really interesting.
Well, the blackout periods are all around earnings season, right?
So is that quarterly?
Yeah, it's every quarter. They're blackout periods for buybacks and for any public commentary about your business, right? Like there's a reason you don't ever see a CEO give remarks about their company like the week before they report earnings, because they're not supposed to do that, right? So, buybacks have been, I mean, this chart really is just talking about the blackout period, but buybacks they have come down dramatically. I'm not necessarily in the camp, every 6 months or so, or the buyback theory rolls around again of stocks are only up because buybacks are and they're down because of buybacks. And I'm not really in that camp. I don't necessarily believe that buybacks act as big of a driver as sometimes they are blamed for. But it is notable when they start increasing dramatically, when they come down a lot, and buybacks increased like a lot last year. If memory serves, everybody was trying to buy the dip in their stock, right?
Oh, that makes sense. So they have these 50% drawdowns, might as well take advantage of it, kind of thing.
Right. And also like, buybacks are an easy way, a cheap way, or not cheap in terms of like they're easy to, if you want to like try to juice an otherwise bad earnings report, you can just announce you're doing a big buyback, right?
Throwing a buyback in there.
What the hell? We'll raise our dividend 10% and we'll throw in a buyback while we're at it, right? So, I don't always look at buybacks, but they are interesting just to watch in terms of the trend. This chart will look exactly the same 4 times a year, right? So this is a quarterly thing, so I don't want to put too much into that.
And then little head and shoulders forming on KRA here, and then the next chart really kind of hits it. This one from Arun, pointing out, is it going to play out like the textbook, or is it going to be one of these failed head and shoulders tops? And that's one that kind of goes along with how Frank looks at things. And okay, we have the bearish pattern here. Is it going to play out the way everyone expects it to, or is it going to totally trick everyone and surprise everyone, which is totally a possibility. So
Looks like it's playing out.
it looks like it is starting to play out for sure.
And to point the S&P 500 chart that Frank shared, I mean, mine looked very similar. I got that breakdown, you get the retest, and now it's heading lower. So
Yeah.
I mean, we'll see, but not a good look. Not a good look to see regional banks breaking down.
No, sure. And when you think about that with small caps too, and you know how much they matter to small caps right now, and those are at a really fragile spot, so small caps can't really afford to lose regionals here.
Right, exactly.
Yeah, that's a good point, Ian.
What is off topic a little bit, but like, what is going to happen with all of these bank branches? You know, like Capital One tried to turn their banks into cafes. I don't know how well it's working out for them, but there was so many bank branches in this country. Like every time I drive, like, you know, in my hometown, I see like the bank that I grew up going to, which is now on its like third iteration, right? But it's still a bank. I don't know. It's every time I drive by it, it's a different local bank, right? And like, what's going to happen when all these banks end up consolidating but even so, nobody goes to the bank. So like, this is like, I don't know who owns that real estate. It's my question. You know what I mean? Because something has to happen here.
That's a good question. Yeah. Like First Republic, are they keeping that brand name or?
Oh gosh. I don't know.
Oh gosh, yeah, doesn't exactly exude.
No, I think in all seriousness, I think First Republic as a brand is going away. I think I remember that from the takeover a few months ago. But yeah, like they got to do something. You got all, you know, banks and malls, right? You got all these banks and you got all these malls that are doing nothing, just sitting there vacant or soon to be vacant. I don't know. Convert them into what? I don't know. All right, 9:34 here. We'll bring on Mary in a second. See what's on her radar, and then at some point before the end of the show, I do want to just run through just a few more earnings reports that we had overnight. But in the meantime, if you want to get the chart report, guys, this is a free daily note that Pat puts together every single day. It gets delivered usually around the close, 4:30,
a few hours after the close. I'd say around 6, 7.
Around 6. Okay, so if you want to get the chart report, the link to get the chart report is in the description of this video on YouTube. I will throw up a QR code on the screen. You can scan that as well, or just Google chart report. That also works too. And again, I can't emphasize enough the consistency and the fact that it's free. It's every day. It's, you know, we can't all spend all day on Twitter. So Pat does it for you. He finds the best tweets and the best charts and puts them all together in one easy to read note. So thank you for your service, Pat.
Oh, sure.
Pat, it's the only way I consume Twitter nowadays.
Oh,
so many boys out there. I'm just like, oh, wait, see what Pat saw today.
I get to, so I've started like interacting with more meme accounts because I try to keep my feed really clean. And I've started like liking more meme tweets and stuff like that. And it's totally messed up my feed. So now I'm just getting served up all these memes. So my feed is just charts and memes. That's it.
I love it.
Mine's utter chaos. So
so is mine.
Yeah. All right. I believe we have Mary here backstage. Let's bring her on and see what Mary is watching.
Mary!
Hey, good morning.
Hey,
you know what?
good morning.
Can you guys hear me? I don't think my earpods are working. So
yeah, we hear you.
All right, let me.
Do you hear
bumper?
us?
What a bumper! I've never seen the Mary bumper. That was cool.
Thanks for that. Yeah, shout out to Izzy and the team.
All right, Mary. You're sort of the, I don't know what, maybe like the person that absorbs all of the trade ideas that get thrown out by JC and Steve and Ian and Pat, and you're getting all of them, right?
All of them.
Of all the ideas that you've seen in the last week or so, any strike your fancy?
Well, I was messaging with Steve last week and honestly for the last couple of weeks, and I kept messaging him, hey, Steve, Bitcoin looking spicy. And he wasn't, he was playing along.
Last week you said that?
Last week, yeah. So last week,
Okay.
we had a conversation about how Bitcoin was holding up compared to the rest of the market. And, kind of just what Frank had just been talking about. We've seen Bitcoin move with the S&P. We've seen Bitcoin move with tech. And, it hasn't been. And that was interesting to me. The weekly, it kept putting in higher lows. So I always am carrying a Bitcoin position through the miners or MSTR. And so I was adding to positions and feeling real good about that now. So, obviously you can't predict these things, but RSI on some of the miners, that was looking really good as we were making some lows. RSI was going up. And then, of course, this isn't a reason to buy, but seasonality. I mean, November, December, really powerful months usually for Bitcoin. And so kind of all those things combined, I was making some trades and that has ended up being profitable. And I'm still in. I think this move personally, this is just my opinion, I think it has legs. And so I'm excited to see where this one goes.
Yeah, I think one thing that makes this move kind of convincing is the miners. You're seeing that participation from the miners, and somebody will have to double check me, but I believe the miners are up even more year to date than Bitcoin itself. So seeing that strength is kind of it has to make you think and kind of wonder.
And I think we've talked about this before, as a group and here on the show, with that seasonality aspect, people are going to be getting together for holidays here coming up. And
I was going to say that.
No,
that's right.
About Bitcoin.
Yes.
And
that's no joke. That's no joke.
No joke.
Ever since Thanksgiving, I want to say 2016. I think it was 2016 because that was when things got going. Was it 16?
It might have been 17. 17, yeah.
Was it 16 into 17 or 17 into 18?
Between October and December in 2017, that 2 months, I think it was
17.
From 5,000 to 20,000.
Okay, so Thanksgiving of 17 was sort of the launch pad for Bitcoin there. And ever since then, I pay extremely close attention to Bitcoin, starting in middle. I'm not even joking, middle November-ish, right? That is no joke. People get together and they talk about Bitcoin. Not kidding.
Yeah.
Right? So maybe I haven't bought any crypto in a while, so I should do that.
Well, so they talked about it yesterday with the move.
Front running Thanksgiving.
Yeah, right.
I think as long as we're above that 31, 32, you buy any chance of weakness back towards it, and then use that as your level.
I like it.
Yeah.
What's your favorite miner?
Oh, I'm in a bunch of them, honestly, you guys. I'm in MST. Honestly, I like to play.
Which one isn't your favorite miner?
It's the junkie in me that I go for MSTR obviously is kind of more of the closest pure Bitcoin play. I'm in Mara just because it's got that high short interest and is extra squeezy. And then I'm in Riot too. I'm in Coin. I'm a junkie. I'm not gonna lie. I'm not ashamed.
I
love it.
Listen, they're working, so I don't think there's any shame in getting involved in them. And somebody had mentioned Bitcoin sentiment. I don't think we're anywhere near levels where people need to be worried about sentiment for Bitcoin. I mean, worry about it once you see Tom Brady talking about it again. We're not near there right now. So,
do you remember the Super Bowl QR code?
Oh yeah.
Wasn't that for Bitcoin?
That's all it was, right? It was just
that was a Coinbase ad. That was an ad for Coinbase.
Yeah, so if those start showing up again during NFL games, yeah, that might be some sentiment check there.
That was wild, man.
But while I've got Ian here, the other area that I am watching, just because I haven't been watching it, has been gold.
Yeah.
And so Ian, does all the great content for what the FICC and our Gold Rush and for our premium service on the All-Star chart side. He has a great chart on, our gold futures. We've shown this hundreds of times, and we were really amped up on gold. Was it last winter, early in the 2023, because we were pushing up against those highs. And I know Ian, JC, and I had a great gold trade at the time. And, we pulled back and got out. And, we just kind of continued to watch this level. I had not realized, though, how close we were again to this level. So Ian, I'd love to hear some more of your thoughts on gold. And the reason that it kind of has sparked my interest is because I'm starting to see some overlap. You guys mentioned how I have access to all the things. I'm starting to see overlap in some of our various services of mentions of precious metals. And when I start to see overlap, I take notice. So have at it, Ian.
That overlap's always a great sign.
Absolutely.
Seeing overlap in energy names a few months ago was also a big heads up. In terms of gold, those former 2011 highs around 1923, 1925, that's really my line in the sand. It's trading above that level.
Right.
Gold reclaimed that level recently. I still think it has some work to do, and that's just because of the dollar and real yields. But I mean, again, it's been so resilient. It's pressing up against those highs. I think it's really just a matter of when, not if, we get new all-time highs for gold and this starts running up to 2,500. But I want to give it more time though.
Okay.
But there's a lot of levels to trade against. So if you want to go ahead and get long gold, if you want to go ahead and get long silver even, or it's some of these miners, I highlighted some miners earlier in the week that are bumping up against critical resistance levels. We see these breakouts. I mean, got to get long, price is king. I truly believe that. And, got to treat it as such.
So I did bring along one chart because, we share charts on this show. And the reason I brought this particular chart was because you have talked about AGI.
Oh, yeah.
We have seen this, of course, on the Buzz and the chart report a couple weeks ago. And so, again, it's that overlap. When I'm seeing things talked about in various places, I take notice. And so this is one that I've got alerts set on and I'm watching. And, that 13, if we start to take that out with a powerful move, I'm probably going to get involved. So not trading this yet, and that's why I wanted to talk to Ian about it, but it's on my radar for sure. And I actually have a sentiment check for you guys. I'd be curious to know what you think of this. So my father-in-law came over just this last week, and he brought with him this stack of silver coins that he had gone to purchase as an investment. And, not a huge quantity, but then here's what was interesting. He said he was at the store and he was behind a gentleman that was picking up $100,000 of gold bars. He packed up $100,000 of gold bars in his car and drove home. And
buried it in the back.
I saw gold.
What is that?
I saw gold at Costco. Costco's selling gold bars now.
You know that guy owned a gun for sure.
It's going to be buried in the backyard for sure.
Yeah.
I saw something talking about a sentiment check on gold. It was actually filmed right here in Encinitas. Ian, you know where that is, right?
Yeah,
20 minutes north of San Diego.
Yeah.
But this reporter was going up to people on the street, and he had a $20 bill and a 1 ounce gold coin. So it's worth roughly $2,000, right? And he would go up to people and he asked, would you rather have $20 or this gold coin? almost everyone, and who knows, maybe it was edited, but almost everyone picked the $20 over,
yeah,
because they don't know that it's worth.
No one knows the value of gold.
Duh.
Right, but I bet if it was a Bitcoin, people would probably know. Talking about sentiment
true.
there.
It's true.
If gold does break out, I think people probably will know what an ounce is worth. So just a little sentiment check. But man, I can't imagine buying 100K worth of gold bars like that.
Well, and like I know my dad has gold bars sitting in the safety deposit box at the bank. Like it's a generational thing for sure. Having it in your hands. Yeah.
They call it boomer Bitcoin.
So true. Yeah. So
I like it.
Well, Mary, good thing you have digital gold.
yeah, my Bitcoin miners.
Yeah, that's right. That's right. All right. Oh my goodness, that's wild. And yes, I am serious about the gold at Costco. Costco sells gold bars. Yeah,
they do.
Do they?
Yeah.
Yeah. I mean, they got everything. They got your clothes, your food, and your gold. What more do you need?
Yeah.
They got it all. TV, exactly. And they got glasses, they got drugs, they got pharmacy.
You can buy wedding rings. I saw they had a wedding ring there,
jewelry
for like $200,000 or $300,000, and I'm thinking, wow, who's buying a wedding ring for $200,000-$300,000 at Costco? But
you know what though? You laugh, but I saw like a Frontline report years ago, and they brought like an expert jeweler, and they compared the jewelry at Costco versus the jewelry at a jeweler, and it was the same. It was just the same.
Yeah.
It was the same quality, right?
You're probably right. Yeah. That's a good point.
Yeah. Okay, real fast. I just want to run through a couple earnings here. We had Snapchat, Visa, and Texas Instruments last night. I want to cover those quickly. Snapchat, I used to care a lot more about, but we know when the stock goes down the way it has, I'm not really sure. It's obviously not an important stock, but maybe important in terms of risk appetite. In any case, they were profitable last quarter. They came in above estimates. Their daily active users up above 400 million now. So I guess good for them. I don't know. The chart kind of speaks for itself. It is flat this morning. Again, the stock used to follow a lot more closely than I do now because it's not just, it's just not what we thought it was. Texas Instruments is important. They are a big semiconductor company. Their EPS came in higher. Their sales came in just a little bit lower, and their guidance was light guidance on the revenue front for the current quarter. So watching TXN today, I haven't checked it. Yeah. Oh wow, it came back. When I looked at it this morning, it was down, but it's been nothing but up since the open. So that should give you a good read into sentiment here today on the tech front, or at least the chip front. I also wanted to look at Visa. We do get MasterCard, I think, tomorrow. They report, but Visa was last night, and the Visa numbers were a beat on the top line and a beat on the bottom line. And they raised their dividend. Look at that, from 45 cents a share to 52 cents a share, and a buyback. What did I say? Dividend buyback. Easy way to juice your report. Stock was down this morning, but has gone straight up since the open. And this morning we had, who do we have? We had Boeing this morning. And there, from what I saw earlier, the report was Boeing was the big one. So let me give you those numbers real quickly, and I don't know if we have a chart or not, but if we do, we can bring it up. I think I saw something about some sort of a delay or lowered guidance. Let me see here. Big miss on their backward-looking earnings numbers, and they reaffirmed. Okay, the guidance is reaffirmed at least, so it was the same guidance as before, but a big miss on their earnings for last quarter. Yeah, okay, so BA, we get that one this morning. All right, not as bad as I would have thought. I'm surprised it went up all pre-market, but we are right on the down about 1.5%. So it's kind of your earnings rundown here. There's 150 reports, this morning. Obviously, we can't get to all of them, but those are kind of the big ones that were on my radar here. And that's what I got. So, should we Going to some recess, everyone?
Yeah, that sounds
do it.
good. Let's do it.
All right, let's do some recess and then we can hop because mom and dad aren't here. We can hop a few minutes early. They'll never know.
Skip
They'll
class.
Never know.
Exactly. Skip the end of class. Leave class a little early. That's what we're gonna do.
Sneak out of the.
Yep.
All right. What we got for recess, y'all?
What do we have?
Okay.
For recess?
Does anyone want to start? Nobody wants to start. Okay.
Friends, why don't
fine.
you lead us off?
I will start, and it's really just a question because every time I fly, it doesn't really matter the airline that I'm flying. I flew United the other day, but like, does anyone ever have a good experience flying? Like we talked the other week about buying airline stocks and airlines just not being a good business. Sometimes I want to buy stocks that you're a fan of their products, right? Stock that you use, that you're a consumer of, and you like their product or their service. And like, does anyone do that at airlines? No, right? Because no one ever has a good flying experience. I'm convinced. I never do.
I had a great flying experience on Virgin Atlantic. Just like a decade ago, maybe.
A decade ago. My point exactly.
No, it was really cool. Yeah, it was a good flight, but yeah, I'm with you.
Okay.
Other than that,
But like 9 times out of 10,
yeah,
you're gonna have a bad experience, right? Whether it's a delay or like in my case, it's almost always kids behind, like little kids behind me kicking my seat the whole goddamn time.
kids.
For whatever reason.
Fine.
Yeah, they're your kids. They're your kids, Ian. Right? Exactly. Yeah.
We're all flying Spirit in a couple weeks, so it's gonna be fun.
God help those poor people on your flight. God help them. Anyway, I don't know. That's my recess. Is the airlines? Not only is it a bad business, but it's more often than not just a bad service too. So nothing to like about them, whether it's the chart or the service. No, sorry.
But hey, Ozempic.
Yeah, right.
Right, Ozempic.
Does that apply to cruise lines too? They're not going to have to carry as much food.
Right.
Just being
that
funny.
But like, wouldn't Ozempic be a good thing for like junk food? Because yes, and maybe in the short term it's not a good thing, but in the long term it is, because you just revert. You go off Ozempic, you revert back, and it's an endless cycle. I don't know.
Right.
Maybe
you can
not.
afford to put on more weight because
Do you afford to buy more to put the weight back on?
Right.
That's it. All right. Who else has something?
Speaking of a good service and a great
Yeah.
chart, last weekend I went to a wedding and I ran into the chief software engineer for Koifin.
No way.
Oh,
Oh, wow.
Yeah, couldn't believe it. Like, you meet people at a wedding. It's like, oh, I'm in finance. I'm like, oh yeah, I'm in finance too. Couldn't believe it. And I was like, I use your software every day.
Wow.
So yeah,
and I have a list. I have a list of suggestions for you. Let me get that list.
Yeah, I know. I didn't even go there. I got his contact. I'm gonna start asking about
How
commodities.
did you guys realize that you guys
I'm gonna give it a
kind of knew? Like, how did you make that connection? How did you realize that he worked there?
We just started chatting. He's married to my wife's close friend.
Oh, wow.
Yeah, so yeah, they got a cute little girl, and she's 2 and she's wild, and I have a 2-year-old, so she was throwing stuff, and I know that game. I know how to play that game. So no, it was a really good time, and it was really fun to meet Kevin.
That's awesome.
Nice.
Yeah.
Hey, Ian, I have a question for you. What are your kids going to be for Halloween?
Ooh, we were dragons last year.
Okay.
Everyone dressed
Like,
up.
do you do the family costume? Like,
Oh yes, we all
wow,
dressed
that's
up.
extra.
I think I'm gonna be a skunk. I think my wife and I are gonna be skunks because we have costumes from a couple years ago, and my
Nice,
5-year-old is gonna be Spider-Man,
Okay.
and then I don't know about the 2-year-old yet. We got to figure that out. We don't have a whole lot of time.
Time's ticking.
Maybe we already have a costume.
Recycle costumes, like
Oh yes, recycle costumes. So
Okay.
my
Oh, yeah.
middle child, he is 10. He's going to be Kirk Cousins for I think the 4th year in a row. So I mean,
4th year in a
done.
row.
I know, right? My oldest, who's 13, gave up trick or treating.
Too
he
cool
got
for that?
Too cool for school. He got braces.
Yeah.
Can't eat most of the candy anyway. So
Yeah.
and then my daughter, who's 7, she wanted to be a unicorn this year, and so got on Amazon, and there is this big, inflatable where she's riding the unicorn, and it blows up. And one of my kids was a dinosaur, one of these inflatable dinosaurs at one point a couple of years ago, and getting these kids to walk in these things, it's like little penguins down the street, and you hit like half the houses because they're so slow. So that's my reason.
That's great.
Halloween is Kevin, and I'll bring a picture next week.
Please.
That's great. I live in an apartment right now. I don't think I'll get trick or treaters, but I'm moving in like 2 weeks, like a week and a half. So I'll just miss Halloween. But I imagine next year will really be the first year I actually am on the receiving end of trick or treaters for the first time in my life. I've always lived in apartments, so
I live in a neighborhood, a large neighborhood in my town, and it is the neighborhood to trick or treat in. So no joke, you guys, vans of people come in from out of wherever, and like 20 kids pile out of them. There are golf carts roaming around with wagons and it's like pickup trucks just full of people in the back. It's insane.
Yeah.
If you don't give out candy, are you like shunned? Is that like an unspoken thing? Is like you have to be a good house?
A few years ago, like there was egging and TPing, like.
Oh my gosh!
I know, like I'm out with
these kids are no joke.
I can't be handing out candy this year, so now my husband stays back and sets up, the solo stove in the driveway, and because it's cold here in Michigan typically for Halloween, and so he hands out the candy. I take the kids, and but there's been like some retaliation to houses that don't hand out candy. Like, what is that?
Yeah. That's crazy, man. Oh my gosh.
It's serious business here in Michigan.
Wow. All right.
I guess I'm bullish Hershey right now. So
yeah, wow. Hey, you know what's actually a cool business? What's the Halloween store? Spirit. Thank you. Yeah, it's just pop up business for 2-3 months a year, and they rake it in, and then they go away, and they come back and
go on vacation.
Yeah, basically, really interesting business they have there. All right, look at us, guys. We did it. We made it. Thank you to everyone for hanging out. Thanks to Mary. Thanks to Ian. Thanks to Pat for stepping in. Thanks to Frank as well for stopping by. I'm not quite sure what we're going to do about tomorrow's show. Steve and JC are recording some top secret stuff that may or may not relate to our Asia documentary. So I don't know. I'll figure it tomorrow out and show up here at the same time, same place, and either we do a show with the guys or no, I don't know. We'll figure it out. But we do have What the FICC coming up at 12:30 Eastern time today. Ian and I, for the past couple weeks, have been soliciting questions for a mailbag episode. That's what today is. If you have any questions you want answered about fixed income, about currencies, about commodities, email them to questions@stockmarketmedia.com. I'll put it on the screen, and we will answer those questions on What the FICC today at 12:30 Eastern time. So do that. Actually, it's in the description on YouTube if you didn't get that. So email us and we'll answer your questions on that show. And that's what we have for the day. So once again, thanks to everyone for hanging out. If you would be so kind and hit that like button, I would greatly appreciate that. Oh, we do have options trade of the week as well at 1:45. No hot corner today. Unfortunately, I think Steve is busy doing the other stuff I mentioned, so we won't be doing a hot corner at the usual time today. So we'll be back with that next week. But we do have options trade of the week with Sean at 1:45, and That's what I got. So go make some money, everyone. All right.
Good stuff. Thanks
for watching.
guys.
Bye, guys.
We did it. Whee! All right. Now I gotta end the show somehow. How do I end the show? There we go.
It's
Run it. I can't take no loss. I don't even know what it costs.